Welcome and thanks for tuning in to Taking Stock for the week ending the 2nd of August 2024. I'm Tim Lincoln, and joining me today is our Head of Stock Doctor Research, Kien Trinh, and we're both here to stream you all things share market. Welcome, Kien. How are you?
It's very chilly here still in Melbourne, Tim, but yeah, we are preparing for the reporting season, which is going to be a big one over the next couple of weeks. And we just had Resmed released this morning, so we're looking at those results quite intently.
Yeah, exciting time of year. But Ken, before we get started, just a reminder to all of our members that all of the information shared today, all of a general nature, so shouldn't be construed as personal advice. And all of the data, performance metrics, and such that we also share all of an historical nature, so therefore shouldn't be relied upon as a guide for future performance. But market volatility is alive and very well, Kien, with the general market outlook narrative changing on a daily basis. It's all over the place.
Mm.
I personally, and with our managed funds, remain on the fence, not prepared to place investors' funds at risk in a market that simply isn't making any sense to us at all from a fundamental or logical sense. And therefore, we maintain a very tactical, neutralized position across each of our funds. I believe there is still a high probability of a hard landing for the general economy that could influence significant levels of increased volatility. And therefore, we're ready to pounce. That's the tactical element, if any, or if and when our belief eventuates. Hopefully, we get the chance to practice our mantra of volatility creating great opportunity for our investors, but time will obviously tell. In the meantime, it is the most important time of year for Australian investors, Kien, with the full year annual reporting season getting into full swing. And it's been fairly quiet for our star stocks thus far, but we expect things to really heat up over the next few weeks. So make sure you have Stock Doctor armed and ready to ensure you're in a great position to make timely decisions and embrace opportunities that may come your way. Set your alerts, manage watch lists, run your filters regularly, and clean out your portfolios of any financially weak stocks that could deeply disappoint, especially in this environment. Take profits and rebalance your portfolio, ensuring you're well diversified, and ideally have 15 stocks at a minimum in your portfolios to avoid over concentration in any exposures. Also, keep an eye on report dates using the corporate calendar, and make the most of the Stock Doctor journal to keep track of your thoughts and any investment ideas and decisions that you make. That's really great for future reference. So, Kien, what can we expect from reporting season this year?
Well, there's a few themes that really stand out, Tim. And firstly, I think risk management remains very important here. You know, we've seen speculative activity. It's still quite rife with numerous unhealthy stocks trading at quite elevated levels. And that's due to all this kind of speculation in the market that's driving up. You know, take, for instance, a few examples here. We've got data center operator NextDC, or even a radiopharmaceutical business, Clarity Pharmaceuticals. The code is CU6 there. And they're trading near their highs despite their unhealthy rating. And you've got debt-laden companies remaining under significant pressure. And just this week, we had news breaking out that airline Rex Express Holdings is in trouble, Tim. But to our members and to us, it wasn't a surprise because the business has been in marginal financial health. And that's due mainly to its high borrowings. Remember, airlines have large debts and liabilities because they lease aircrafts. And on top of this, you've got their margins, which are impacted by maintenance costs, employee salaries, and airport rental agreements as well.
Yeah, check all those companies out in Stock Doctor. Great case studies, and especially on the ones that we should always be avoiding unless we really understand the businesses thoroughly and prepared to have a small specky exposure to them. But and the intense competition, along with the potential for major disruptions, such as those from the recent CrowdStrike technology outage, Kien, has led to a perfect storm for further and increased levels of insolvencies, which is a real worry, but easily avoided in Stock Doctor. And Kien, back to Rex, not surprisingly, they've now entered into voluntary administration and is suspended from official quotation.
Yeah, that's right, Tim. And another key theme that we'll be watching very closely is the input costs and how this will impact profit margins, which is one of our key criteria, Tim. Remember, June quarter inflation data released this week that confirmed the stickiness in inflation, with core annual inflation at 3.9%. And with tax cuts still flowing through in this financial year, it's going to be very difficult for inflation to move back within that RBA's target band of between 2 and 3%.
Yeah, yeah, you throw into the narrative all of the concerns around, jobs, unemployment rates, payroll numbers. So it's all adding to the total narrative now, isn't it? That is pretty messy, but interesting to help us get a picture on where things might end up. But yeah, cost inflation remains a threat, Kien, to profit margins, as you just articulated. And was it an issue, though, also with Gold Resources, Kien, which released what appears to be a disappointing update?
Yeah, Tim, look, costs has always been an issue for a lot of resource stocks, especially with wages and input costs. But Gold Road was actually impacted by external factors as well. And if you think about it, its key asset located in Western Australia, it experienced larger than anticipated rainfall during the first half of the year. And this led management to lower their full year production guidance by about 5%.
Mm. Yeah, it's another timely reminder, isn't it, of the significant risks in resource companies. So many elements unpredictable, which is, we're having deep conversations in the business right now about how we handle that in regard to resource companies going forward, but more on that later. I see you've transitioned Gold Road to a borderline star growth stock too, Kien, although its earnings revisions remain positive on the back of higher gold price assumptions.
That's right, Tim. Yeah, but the things can change very quickly, especially after that update as well, Tim.
Yeah, and during the weekend, mining heavyweight Rio Tinto released its interim results. Despite weak iron ore and copper prices over the year, the numbers look pretty strong, with return on invested capital at around 24.5%. Also, they were able to sustain their dividends with an interim coming in at US 177 cents for the half. What are your thoughts on the stock and for the sustainability of their income, Kien?
Yeah, our analysts are currently assessing those numbers, Tim. But normally for us, I think resources are not your traditional income stocks, but the resilient iron ore price has helped the company sustain its dividend for now. When you're looking at the forecast gross dividend yield, Tim, it looks attractive at around close to 8% here. But investors will really need to be mindful that this stock is dependent on commodity prices for the year ahead. And the risk is also there's that risk of slowing growth in China that we've seen. In addition, Rio has actually flagged plans for further investment in copper and lithium, which can easily erode that capital for distribution. So we just got to be careful here.
Yeah, you always need to be careful on the resource end of town, Kien, that's for sure. But those that are comfortable with the risks and want to collect the dividend, Rio goes ex-dividend in mid-August. And Kien, another ex-star stock, released its financial results over the week, was bad debt collector Credit Corp. I don't think they use baseball bats anymore to collect their debt, but they certainly got some very tactical ways to do that in today's world. The results revealed an improvement in return on equity and net profit margins under Golden Rule 2. Is this the reason why the share price jumped by some 15%, Kien, noting it has come off a bit of a low?
Yes, Tim, to clarify Credit Corp's business, if you think about it, that revolves around buying unpaid debts from banks and utility companies, and also, buying them at a discount and then collecting that full amount from consumers. Now, although the bad debt market has slowed, the business has generated an improvement in their margins and return on equity, as you suggested, Tim, and that's due to the growth in what they call unsecured consumer lending portfolio. That's the high interest loans that they lend out to consumers. And also they were able to achieve rising debt collection outcomes in the US.
And Perhaps it is a stock to pop on a watch list or on a member's radar, Kien, with return on equity expected to improve over the year, over 10% for the year, which is positive. And therefore, Credit Corp could potentially return to our star stock universe in the near future. Although I noticed the forward-looking numbers are still a little bit below our thresholds, but looking healthier. At these levels, it doesn't appear expensive, with the stock currently trading at a decent discount to fair value, with 7 covering analysts contributing to the target, giving us a fair amount of confidence relative to that forward-looking price target. And now to under the microscope, Kien. And this week we'll be looking at the reporting season for the week ahead. And apart from the AGM for Computershare, we'd like to specifically highlight stocks that could possibly be included into our star stock universe. So trying to be really proactive here. And the first stock we want to look at is REA Group, and they're expected to release their results at the end of next week. REA, the fundamentals have always remained super strong, but because of just a 10% drop in their return on equity threshold a couple of years ago, they exited our star stock universe. But I'm fairly certain that some of our longer term investors would still hold REA in their portfolio because the numbers have certainly continued to stack up. But what are your thoughts, Kien, on the company and the possibility of them coming back into the star stock universe?
Yeah, stock definitely on our watch list, Tim, and the market is expecting a strong result for REA. And that's driven by when we track listing volumes as well, you can track it on the prop track data, and it's showing that there's a 7.3% rise in total listing volumes, which really drives that profitability for REA. So no doubt this has helped support the positive earnings revisions we can see on screen on Stock Doctor over the last 3 months as well. But a key drag that we'll also be watching on the results should come from its India segment, Tim, which has been loss-making for some time. And this is a small portion of their profits, though. Currently, consensus is expecting this segment to break even in about 2027. So it'll be a positive surprise if the business brings forward this timeline. And with their forward return on equity expectations improving, we anticipate this stock to be included in our star stock universe soon.
A big welcome back possibly then to REA, Kien. And I believe another company on your watch list, Kien, is building materials business James Hardie, or JHX is their code, which is expected to release its quarterly results. The business has performed well over the last year, generating an outstanding return on equity of 40% and net profit margins of 17%. Again, really impressive numbers for a company of this size. Not many businesses can generate that level of profitability, but this is due to competitive advantages in cladding and plasterboard products.
Yeah, that's right, Tim. And this stock was an ex-star stock of ours, and we removed it because we thought there were some risks on the horizon with interest rates and building construction environment, which has been quite challenging. And we've seen this play out with financially unhealthy business, Tim. Fletcher Building, for instance, you've got high house prices, and that's really reduced renovation activity and demand for building products as well. So this has led to some negative earnings revisions over the last 3 months of around 6% for James Hardie, but we'll be trying to understand whether these risks have subsided after they've announced their results.
Excellent, Kien. And an income stock on your radar is general insurance business QBE, which is expected to report its half-year results next week. The stock is on a gross dividend yield of around 5.5% and is expected to go ex-dividend in mid-August. So what are your thoughts on QBE, Kien?
Yeah, we're watching the insurers quite closely this reporting season, Tim. Although that gross dividend yield seems low relative to the other insurers, though, we just got to also understand that there's a lack of franking credits here as well. But the insurance company has undertaken a strategic review to simplify its business, and it's been offloading underperforming segments such as those from its North American market. So this could help improve its profitability and support the growth in future dividends in the near future as well. And Tim, one of our star stock universe, I noticed fresh off the news this morning, Resmed, they've released their fourth quarter revenue and appears to be in line with expectations, although there was a negative reaction in the US as well because it's dual listed. But please refer to our commentary by Jason Yin. But we've retained coverage of Resmed as a star growth stock, but that's pending a reassessment of its ability to satisfy Stock Doctor's growth metrics when they announced their full year results in Australian dollars towards the end of August. But it looks like this stock could meet our return on equity and net profit margin hurdles. And the share price has been certainly volatile over the last few months, Tim, and that's due to investor concerns about the success of weight loss drugs like GLP-1 and how this could impact its market share in sleep apnea devices. So far, the earnings outlook has held up with revisions still positive, Tim.
Yeah, it's not without its competitive risks at the moment, but that's a landscape for most businesses at any one time. But they're just some things that obviously investors need to take into account. But overall, Kien, outstanding business and generally warrants a place in any 15 plus stock portfolio. Not only holds a strong market position within the sleep and respiratory care segment, but also has grown through innovation, investing towards digital health and cloud-connected medical devices to help doctors and consumers monitor their sleep problems. Fantastic stuff. In addition, Resmed continues to be inspired by its founder, Peter Farrell, so the founder effect alive and well, who serves on the board and as non-executive chair. And his son, Michael Farrell, so father and son combination, bit like net wealth. Michael has been the CEO since 2013, I believe, and he has significant skin in the game. Although that's not currently visible in Stock Doctor because they're actually dually listed both here and in the US. So we're just doing a little bit of work at the moment to try to gather that holdings data, so it is more current, so we can actually, members can see the skin in the game. More on that though. Yeah, but an outstanding business. Love Resmed and can't wait to see their results, Kien. And now to question of the week, Kien, and with many companies announcing dividend payments over the reporting season, how can Stock Doctor members monitor and track dividend payments over the next few weeks?
Yeah, this is very useful for our members in Stock Doctor. But for those looking for dividend opportunities with upcoming payments, you can definitely refer to the pending dividend section under the Tools tab here, Tim. From here, the companies are listed in chronological order according on the next available dividend date. Remember, Stock Doctor also provides an estimate of the dividends per share here too to help you understand how much you're receiving.
Yeah, there's many ways in Stock Doctor to do this, isn't there, Kien? And another way is to monitor upcoming dividends via the corporate calendar, where you can filter on event types such as ex-dividends. You can also create a custom watch list of companies or select a desired portfolio, such as star income stocks, and then you can go across and sort the companies by ex-dividend dates, and can also view other income fields such as franking, payout ratio, and very importantly, forecast dividend yields.
Yeah, there's a lot in there, Tim. And another option is to open up the alert manager and create a notification alert for days until ex-dividend or your dividend payment. And also, if you turn to an income stock under the 9 golden rules page as well, you can also click on the dividends tab there, which gives you a dividend summary of the company, including a history of their dividend payments and also the forecast metrics as well.
Yeah, and of course you can find most of this information under Golden Rule 2 or 3 on the 9 Golden Rule screen, and see some of the other important information up on the toolbar relative to when your watch lists and alerts and calendar dates are coming up for their anniversaries. So I think that's about it for this week, Ian. Always great sitting down with your mate and having a good chat, especially this time of year being reporting season.
Yeah, pleasure, Tim. And it's going to heat up over the next few weeks. So our team will be very, very busy and analysing those results, and also, looking for those emerging opportunities for our investors as well.
Yeah, for sure, Kien. Thanks a lot again, mate. Really appreciate it. And all the more reason, Kien, why our members should tune into Lincoln Live on Monday morning. where obviously we'll be continuing to discuss stocks as they be hot off the press during reporting season. So that'll be really alive and well, our Lincoln Live chat. Also, we're about to launch another online and virtual masterclass event that will be conducted in October. Invitations for that will be going out very, very soon. That's on the back of a really popular outcome we enjoyed in Melbourne and Sydney, which was face-to-face earlier this year. But this is really tailored for those members who are unable to make Sydney and Melbourne earlier on, so accessible for all of those around the country, and also a good refresher for those that have attended masterclass events in the past. More on that soon. Also, we'll be launching a new referral campaign in the not too distant future, also with a magnificent grand prize that I can't wait to share with you all. All right, that's it for now, Kien. Take care, everyone. Stay really disciplined and proactive this time of year with your portfolios. Have a happy, healthy, and prosperous week.